Okay, hello everybody, and welcome back to another video from the Investor Diary. In the past few weeks, we've been very busy studying our plan. This is why we couldn't record any videos here in TradingView or in any other platform. Now we feel that we have conducted enough testing on these indicators and their value. And I think maybe if I give them more time and more training for myself on how to apply them, maybe something will come out of them. But what my problem with those is that I'm finding it difficult to find a suitable stop loss area. Now, I started with testing having no stop loss. It didn't work, and the stop loss areas that I chose were not very convincing for me, in the open trades that I was testing. So I moved back to the original plan where everything started. Everything started with market structure. As much as I loved the elements and applying the market structure because it gave me really an ease of mind with everything. How Market structure for me is better, for example, than the classicals. The classical support and resistance. Let me show you why I like it. When we talk about support and resistance, we come, for example, to this chart. Okay. And then we need to decide where is the support and resistance. Now, this is, to me, this is a range. Okay. And this range starts from this position here until this area here. Okay. And then the upper one is, I can draw it from this to this, for example. But see, this is my problem with classical. It's a point of view. There are no rules on where is the support and resistance. Everybody draws support and resistance in a different way. Even a trend line, some people draw it like this, and draw it like this, taking the first and the second bottoms. But if in this case the first and the second are these, but let's take it this one, and then what they do is, just to make things clearer, control C, control V, they take the same trend line so as to keep it with this, and then they put it on the top between those two. This is one way of either drawing a channel or a trend line. Okay. And some other person would come and say, no, this is not the way to draw a trend line, this is the way to draw a trend line. Take most of the touch, make as many touches as possible to the line. So there are different ways, but in market structure, the way market structure was explained to me, for example, when there is an inducement, an inducement is the pullback before the lower low, if the trend is going down. Okay. And it's easy, and then I understand, I need to understand what's a pullback. This is a wrong pullback, actually. Wow, I just, no, it's the right one. I thought this is engulfed in this, but it's not, because this green candle breaks this candle and then it goes up, which makes it a good a valid pullback. And this is the last pullback before the last low. And if it touches this, then this swing is confirmed. And if the price went back to it, so the rules are really clear to me. And OB is from tail to tail. Other people just the diversion to that is that other people will go from or they will draw it on the body only. But for this I don't know plan, it is based on tail to tail. So things are easy for me. Things are easy for other people. The classical are easy, and they're making profits, man. I know that they're making profits. So what I'm saying is that I'm not saying this is better than that. There is nothing, in my point of view, nothing is better than nothing. Okay, there is no better or worse. It's, I think we are lucky as traders to have different ways to look at the market. And with these different ways, that means we can choose and pick the way that is most suitable to our style. And when we talk about style, we know we as people have different ways of understanding the world around us. Most of us know that the three modalities between visual, auditory, and kinesthetic. And I'm a kinesthetic person, so I need to try things out uh, before before I understand them and grab the concepts in a confident way. Today, and why I'm saying all this is an introduction to say that developing the trading platform, my personal trading platform, which is the trading environment that I'm building, which is this one, which is this is the trading. Why is it doing this? This is the trading platform, and it consists of four elements: the trading philosophy, the strategic objectives, the methodology, which is the strategy, and the plan. We already talked about the philosophy and the strategic objectives. In this session, the plan is to talk about the methodology. So, the way I call it, it's either the trading methodology or the trading strategy. I mean, both work. And because of the major changes that I've done during the past, I don't know, 4 or 5 weeks, I decided to go back to market structure. And what I'm planning to do is during, I was really fixated on getting a plan that is consistently profitable. But I think there is a step before that one, which is being proficient in applying the plan that we are applying. We need time to train ourselves to apply the plan in the best way possible. Because by time we realize things that how to improve the implementation of the plan and therefore the plan itself. So what we need to have before concentrating on the profits of the plan, we need to understand that we have become comfortable applying the plan, professional in applying the plan. Our muscle memory is working extremely well, and our eyes can locate areas on the chart easily based on the plan that we want to follow. And I think the coming few weeks I will concentrate on that. I will try to concentrate on that. I'm still fixated about the profitability of a plan, but I need to focus on training myself on executing the plan before concentrating on the profitability of the plan, and to give a better a fair opportunity for the plan to show its profitability. For example, if I'm not executing the plan in a good way, the plan will fail, and I will say that the plan is not profitable. So, and the question will be, is the plan not profitable, or my execution of the plan that is not making the plan profitable? So, so as to eliminate this option, then I need to train myself on executing the plan and in the most professional, fluent way as possible. I don't know what word to use. Anyway, okay, let's go. Before going there, I need to remind everybody that I'm showing this trading platform as a case study. So, anybody who's watching the videos should take this as a case study, meaning an example for you to build your own trading platform and trading environment. So these are only, this is my personal trading environment, which is based on my own experience and my own self training. And I believe that everyone should have one. But and the purpose of these videos are not to tell. uh, I'm not saying that this is the plan. I'm saying this is my plan and this is how I organize it. So I'm trying to show how to organize a trading environment or a trading platform. Okay, I hope this is clear. So now let's move to talking about what we want to talk about today, which is the methodology or the trading strategy that I chose for myself. And now it was different before. I changed it today to reflect the changes that I made to the whole trading plan. Okay. Now, the trading methodology or the trading strategy serves the strategic objectives, meaning that the strategy is the way to achieve the objective. Okay. And so, if we need to take a look at this and see if this will help us achieve that. Okay, that's the idea. And the philosophy is doing everything under these guidelines. So all this below needs to be done with the spirit of this philosophy. Okay. So I will concentrate on one currency. I will start with the Euro USD, and if things are great there, then I will stay there. And also another condition, I have only a maximum of 3 hours to trade. So it's either within these 3 hours, I either find an opportunity in Euro USD, or if I still have time, I move to another pair. And I need to move from the weekly all the way down to the 1 minute. And I didn't try that. There is no place where I wrote this. Yeah, depending on market structure 2002. I didn't say that. Okay, this is for another time. I will not waste the time now correcting it. So yes, now concentrating on one currency, now depend only on market structure tools. All the other indicators, the stochastic, the RSI, the exponential moving average, etc., will be there as an extra taste, to have an idea of those indicators, what they're telling me and what added value are they giving, but they will not be part of the trigger. They will not be part of saying yes or no to the trade, but they will give extra information that will help the decision making. But I will not say the RSI needs to be in this place for me to take the trade. And if it wasn't, I will not take the trade. This will not be anymore the case anymore. Okay, it will all be it will all be dependent on market structure rules. One weakness that I have there is that this will, I need to say that. Now, one weakness is that, for example, when the price reaches a point of interest, and I want to see a reaction. Now, the reaction is price action. So I need to see candle formations, and this is one of my weak areas. Candle formations is not one of the things that I really like. I like other ways. Um, to understand or to apply, but price action is not one thing that I can spot. I feel that it's fluid. Um, and it doesn't give the right. For example, I will be more relaxed with something like this. For example, this is a cell, but anyway, it's a cell anyway. So even if it made the reaction here, it will go as a buy. Okay. Okay, this is interesting. Now, if it went up here to make a reaction on the IDM, this indicator will be a buy. So if it went down, it will stay a buy because see the distance between the price and the indicator where it stops and it changes direction. This is the buy direction. Okay. So until I don't know if this could be one option actually to try to depend on that. So my weakness is price action. So understanding that there is a reaction will depend on price action. Okay, let's go back. Time is catching up with us. So here a trade will only be opened. A trade will only be opened at a discount for a buy and a premium for a sell. Let me explain that, and this will be the first part of the trading methodology. We will do the second part so as because we have only 5 minutes left, and I want to explain this for those who don't know. So we will have this in two parts. We will talk about the trading strategy and another. We will continue in another video the trading strategy, but let's show what's premium and what do we mean by premium and discount. Let's look at the daily here, and let's say that the trading range has been set. I think the 4 hour, but the 4 hour range is a lot. Okay, this is the 4 hour range. This is the high, this is the low. So we take the Fibonacci. Okay, where is the Fibonacci? We take the Fibonacci here. Here we will be looking, the market structure is going down and we will be looking at selling opportunities. So in this case, so this is the 50% of the Fibonacci. The upper area is called premium, the lower area is called discount. Regardless if the trend is going up, the trend is going down, what is above the 50% is premium, what is below the discount is what's below the 50% is discount. So it doesn't matter. It doesn't matter if the Fibonacci is going that way or the Fibonacci is, if the trend is going down, if the trend is going up, the fifth it's the same. Above the 50 is premium, below the 50 is discount. So this is a sell. We're looking for selling opportunities, and let's say now the price is going up. This is the daily inducement, and then we have an order flow here at the 50%. This is interesting. We have an order flow and daily order block. Okay, so these are in the premium. So when we're selling, we need to find opportunities in the premium, and this is an example. But the this inducement is not in the premium. So in this case, in this range, but we don't know in this range where is it. In this range, look at this range. It's the same range actually. So the 50%, the inducement here is in the discount. So if my rule is saying I will only take selling opportunities in the premium section, meaning even if I see a reaction here, I will not take the trade. So this is the meaning of this. Okay. And now if the trend is upward, let's show this. We don't have much time. Okay, let's see this one. If the trend is upward, as we said, this is premium, this is discount, then we need to find buying opportunities within the discount below the 50. if we're looking for buying opportunities. Okay, this is it, guys. Thank you very much, and we will continue with the trading methodology next week, hopefully. Thank you very much, and see you in the next video. Bye bye.